obviously, there is this risk that New Zealand has to cut rates a little bit faster compared to major other central banks because they've been so aggressive in their tightening cycle. They're one of the central banks that have raised rates by the most, very much close to the Fed. But it does increase the risk that we might see rate cuts a bit sooner there. However, in saying that, the data is still mostly holding up in New Zealand, particularly on the labour market. The labour market is still extremely tight, even though I guess technically you can say that New Zealand has or was in a technical recession.
Is the employment market tight as a function of migration, in your view? The fact that it's been, like, there has been some, but it's been relatively anemic. I think I was looking at the last data, I think it was this week, that suggested a 5,000 or plus 5,000 net adds. Is that the driving factor, or is there something else at play in your mind?
Well, if you have high migration, to keep the unemployment rate unchanged, you have to see the demand for those workers. So just because you have more people entering the labour market doesn't mean that you necessarily have a strong labour market. That influx of supply needs to be matched by demand. And what you've seen in New Zealand is that even though they have had high migration, just like we have had it here in Australia, there has been enough demand to keep up with that influx of new workers. So clearly, the labour market is still in pretty tight conditions and workers are still demanding more staff. And that's kind of, we've seen that around the world across developed markets after the pandemic. The one part of economic growth that has stayed extremely strong across all the major economies